When you see ads on your phone saying "shop like a billionaire," you probably wouldn't think that behind this seemingly ordinary shopping app stands a business empire that created a $200 billion market cap in just 7 years. What's even more shocking is that this company, which manages hundreds of millions of users worldwide, remains a mystery that no one can fully explain how it actually operates. In 2024, Pinduoduo's independent visitor count reached 467 million, ranking second globally, right behind Amazon. Yet, out of 56 Wall Street analysts covering the stock, 53 admit they lack sufficient information to support their judgment. When a $200 billion empire chooses to run in the shadows, how exactly did it create the fastest globalization miracle in business history? In April 2015, while Alibaba and JD were locked in an intense battle for dominance in China's e-commerce market, former Google engineer Colin Huang quietly launched a project codenamed Pinduoduo in an unremarkable office building in Shanghai. But from day one, this project carried an unusually mysterious quality. Huang didn't announce his entry into e-commerce with fanfare like other entrepreneurs, nor did he seek media attention. Instead, he chose an almost invisible way to start the company. Corporate registration documents show that 90% of Pinduoduo's shares were held by a woman in her 60s named Ding, while Huang himself had no apparent connection to the company on paper. Even more peculiar was the company's internal operations. From the very first day, Pinduoduo implemented strict secrecy protocols. Employees could only communicate using nicknames, were prohibited from creating WeChat workgroups, and weren't even allowed to mention work content on social media. An early employee recalled, "I worked at Pinduoduo for 2 years, and I only learned my colleague's last name when I was leaving." Behind this extreme secrecy was Huang's deep understanding of market competition. In China's 2015 e-commerce landscape, Alibaba held 54% market share and JD held 17%. Any new innovation, once exposed, would immediately be copied by the giants. Huang's strategy was simple: accumulate power in darkness, strike fatally in the light. Pinduoduo's core innovation was the group buying model. Users would invite friends to purchase the same item together, and once the required number was reached, everyone could get the product at a lower price. This seemingly simple mechanism actually leveraged Chinese social habits and price sensitivity. More importantly, it created an entirely new way to acquire users. Every group purchase became a free viral marketing campaign. In September 2016, Pinduoduo merged with another project controlled by Huang called Pinduoduo. The new company kept the Pinduoduo name, but with an even more complex ownership structure. On the surface, Pinduoduo was owned by multiple individuals, with Huang appearing as just one ordinary shareholder. But everyone in the know understood that these shareholders were all Huang's proxies. The genius of this ownership design was that it avoided regulatory risks while maintaining decision-making efficiency. While competitors were still arguing over complex shareholder structures, Pinduoduo could make major strategic adjustments within 24 hours. By 2017, Pinduoduo's user count exceeded 100 million, but the outside world still knew very little about the company. Media coverage was sparse, and even competitors couldn't figure out Pinduoduo's real numbers. Alibaba executives admitted, "We know Pinduoduo is growing, but we don't know how much." In July 2018, Pinduoduo suddenly announced its Nasdaq listing, shocking the entire industry. Even more shocking was the data revealed after going public. 300 million active users and annual GMV exceeding 100 billion yuan. Almost everyone had underestimated this beast that grew in the shadows. Going public didn't make Pinduoduo more transparent. Management's answers during earnings calls were always vague. Investor relations activities were extremely rare. Media interviews were practically non-existent. But this mystery made investors even more curious, and the stock price kept climbing despite the skepticism. In 2020, the COVID-19 pandemic unexpectedly became a catalyst for Pinduoduo. The pandemic allowed Pinduoduo to validate a key hypothesis. Chinese consumers' demand for low-priced goods is unlimited, and the viral spread capability of social commerce is unbeatable. By the end of 2020, Pinduoduo's annual active users reached 788 million, surpassing Alibaba for the first time. Even more shocking, Pinduoduo achieved quarterly profitability, proving that this seemingly money-burning model had long-term commercial value. But Huang knew that domestic market success was just the first step. The real battlefield was overseas. In April 2015, while Alibaba and JD were locked dominant
in March 2020, just as Pinduoduo announced quarterly profitability, Huang resigned as chairman, handing over daily management to CEO Chen Lei. Insiders revealed that as early as late 2019, Huang had secretly begun preparing a plan, codenamed Project Global. The core of this plan was to replicate Pinduoduo's model in global markets, but the challenges were unprecedented. Different cultural backgrounds, complex regulatory environments, and strong local competitors. More importantly, any large-scale internationalization moves would attract attention from the US government. In early 2021, a new company called Pinduoduo Cross-Border was quietly established in Shanghai. On the surface, this company had no connection to Pinduoduo, with only 10 million yuan in registered capital, and a legal representative who had never appeared in public. Throughout 2021, Pinduoduo Cross-Border operated in secret. It registered subsidiaries in Boston in the US, Dublin in Ireland, and Singapore, establishing a complex ownership structure. More importantly, it began poaching talent from within Pinduoduo to build an internationalization team. Meanwhile, Pinduoduo continued perfecting its business model domestically. In 2021, the company launched Pinduoduo Maikai for community group buying, introduced Pinduoduo Video to test short video commerce, and most importantly, began developing deeper relationships with China's manufacturing belt, establishing closer partnerships with Chinese factories. These seemingly scattered business expansions were actually all preparation for going overseas. Pinduoduo Maikai validated Pinduoduo's supply chain management capabilities. Pinduoduo Video tested the viability of content commerce, and the manufacturing belt partnerships provided sufficient product sourcing for overseas expansion. In early 2022, international developments added new variables to Pinduoduo's overseas plans. But Huang saw opportunity. Global consumers' demand for low-priced goods became even more urgent amid economic uncertainty. In June 2022, Pinduoduo Cross-Border completed its final technical preparations. It developed a completely new cross-border e-commerce system that could support multiple languages, currencies, and payment methods. It established logistics networks covering North America, Europe, and Asia-Pacific. Most importantly, it found a business model that could avoid geopolitical risks, full management. Under the full management model, Chinese factories only handled production, while the platform managed product selection, pricing, marketing, logistics, and customer service. This meant overseas consumers were interacting with the platform brand, not Chinese manufacturers' brands. From a regulatory perspective, this was an Irish company selling global products. From consumers' perspective, this was a shopping platform offering ultra-low prices. In August 2022, final preparations were complete. Pinduoduo Cross-Border chose the brand name Temu, short for Team Up, Price Down, meaning unite together for lower prices. On September 1st, Temu's US website quietly went live without any promotion, media launches, or even mentions on Pinduoduo's official social media. Just 1 week later, Temu shot into the top 5 of US shopping app downloads, and everyone realized a new global e-commerce giant was being born. On September 7, 2022, Temu's first day on the US App Store generated 100,000 downloads. By day 7, that number had skyrocketed to 1 million. On day 14, Temu topped the US shopping app download charts, surpassing Amazon, eBay, Walmart, and all other domestic giants. Temu's first killer weapon was price. A phone case selling for $15 on Amazon cost only $3 on Temu, A t-shirt priced at $20 on Shein was only $8 on Temu. This price advantage wasn't simple subsidization, but systematic cost restructuring. In traditional cross-border e-commerce, products pass through brand owners, distributors, platforms, and logistics providers, with each layer adding markup. Temu's full management model directly connected Chinese factories with overseas consumers, replacing intermediary steps with algorithms. More important was the marketing strategy. Temu perfectly transplanted Pinduoduo's bargain-together gameplay overseas, but with local adaptations. In the US, Temu launched spin and win wheel games. In Europe, it introduced daily check-in rewards. In Japan, it offered lucky draw activities. Different formats, but consistent core logic. Get users to actively spread the word and reduce customer acquisition costs.
In February 2023, Temu made a decision that shocked the industry, spending $14 million on Super Bowl advertising. This was the first time a Chinese e-commerce company appeared during America's most expensive advertising slot, with a 30-second ad that let 115 million American viewers remember the slogan, "Shop like a billionaire." Within a week after the Super Bowl, Temu's downloads increased 300%, and daily active users exceeded 10 million. More importantly, Temu began expanding into Europe. March saw the UK site launch, April brought Germany, and May added France. Every new market entry saw Temu quickly top local app download charts. Pinduoduo's success in China largely depended on the WeChat ecosystem and Chinese social habits, neither of which existed overseas. Would Americans share shopping links on social media to save a few dollars? Could Europeans accept 15-day shipping times? The answers became clear in the second half of 2023. Data showed Temu's user retention rate in the US reached 68%, 61% in the UK, and 58% in Germany. Even more shocking was the repeat purchase rate. American users averaged 24 purchases per year on Temu, with $40 average order values. This meant an American user was shopping on Temu every 15 days. In December 2023, Temu announced a milestone: 467 million global independent visitors, ranking second worldwide, behind only Amazon. More importantly, this number was still growing rapidly, with second half 2023 growth reaching 106.4%. In early 2024, the US Congress began paying attention to Temu's rapid rise, questioning its product sourcing and data security. The EU also began investigating whether Temu was engaged in dumping practices. More importantly, traditional e-commerce giants began fighting back. Amazon launched its Haul, low-price shopping section. eBay increased support for Chinese merchants, and Walmart partnered with ByteDance to launch Walmart TikTok Shop.
When Pinduoduo released its third quarter earnings, one stunning figure left all investors speechless. Overseas business contributed transaction service revenue that grew 357% year-over-year to 40.2 billion yuan, representing 35% of total revenue. This meant that in just 2 years, Temu had become Pinduoduo Group's most important growth engine. In the second half of 2024, negative press about Temu came one after another. The US Congress questioned its product sourcing, suspecting the presence of sensitive items like Xinjiang cotton. The EU investigated whether it violated the Digital Services Act. India suspended Temu's operating license, citing national security concerns. In September 2024, Amazon launched Amazon Haul, directly targeting Temu's low-price strategy. While product selection was relatively limited, Amazon's brand trust and logistics advantages remained strong. More importantly, Amazon began targeting Temu in advertising placements, driving up Temu's customer acquisition costs. Temu's success in the US market largely depended on the de minimis provision, allowing packages under $800 to enter duty-free. But in 2024, Congress had already begun discussing modifications to this rule. Once the duty-free threshold is significantly lowered, Temu's price advantage will face major impact. Similar risks exist in Europe.
The EU is considering imposing additional tariffs on cross-border e-commerce packages from China, citing fair competition protection. If these policies are implemented, Temu will face fundamental restructuring of its cost structure. But Huang seemed prepared. In October 2024, Pinduoduo announced establishing European headquarters in Ireland, a research center in the US, and Asia-Pacific operations in Singapore. On the surface, this appeared to be normal international expansion, but the deeper logic was risk diversification, establishing operating entities in different jurisdictions to reduce the impact of policy changes in any single market. In 2024, Temu began massive investment in AI technology, aiming to boost intelligent recommendation system conversion rates above 20%. The company also began testing unmanned warehousing, automated sorting, and intelligent customer service, trying to offset rising labor costs through technological advantages. Pinduoduo's secretive culture was an advantage in its small company days, but began showing drawbacks in globalization. Employees from different countries struggled to understand this secretive culture, making local talent recruitment and retention challenging. More importantly, lack of transparency left the company passive in crisis management, with every negative incident being infinitely amplified. Huang's solution was gradual decentralization. In December 2024, when Temu announced breaking through 500 million users, everyone realized this mysterious empire that emerged from a Shanghai garage had become an undeniable force in the global e-commerce landscape. But the real test was just beginning. From the mysterious experiment in a Shanghai garage in 2015 to a global empire covering 48 countries in 2024, Pinduoduo redefined what China speed means in 9 years. It proved that in the information age, maintaining mystery is not only possible, but potentially more efficient. But like all business legends, the greatest test often comes after success. When mystery becomes a burden and speed encounters resistance, can this invisible giant continue its global conquest? Time will tell.